Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. As the market headed towards 65 cents, resistance came in quite heavily and now sees a return back towards the 60-day moving average, closely seen towards the bottom side of this range. We just evaluate here of around 63.80.90. The hawks were out yesterday as the RBA lifted its interest rate 25 basis points from 4.1 to 4.35% and still holds to a somewhat hawkish statement. So the bears are likely to be weighing on the Australian dollar as the sentiment is slightly shifting. But I'll be a little bit cautious in case we get a rejection because the technicals haven't fully broken, and therefore from 63.80 I'm not ruling out another chance for a retest of that topside high around 65 to about 65.45. So do be on your guard in case we get a rejection. Euro slightly weaker after posting the gravestone doji, but still looks like it could head on towards 107 and 109 as the US dollar index, which measures the greenback strength of a basket of 6 major currencies, rebounded to 105.30. Still, the market is likely to find good support, getting close to that bottom side of around 106.40 and then eventually see a rebound. As I mentioned, the technicals haven't broken down fully. Dollar yen regaining some of its momentum, but still likely to find difficulty as it heads towards 151. I feel the market is still destined for a downward challenge and look towards the region of 147.80 and reassess. Sterling a little bit weaker, as we can see here from the shooting star, could see a little bit more to the downside today and look towards the region of around 122.35. I'm not going to get too negative because the technicals haven't broken down, so therefore we could still see a rise on towards 124 to 125. Gold very much on its target now, 1,954 after taking another heavy hit overnight and plus its second consecutive bearish day. Technicals have broken down. Now keep an eye on this level of 1,954 as a break would expose the region down to 1,924, where I favour after the recent challenges towards 2,000 was somewhat overextended from this bull run and now looks for a correction that could, as I mentioned, see to 1,924. Oil dropped 4% overnight and crushes the level around $78 and from there exposes further losses, which could see a move now to $74 a barrel. To be on your guard though, as the market is getting somewhat oversold, but the trend is supporting a bear case. But I feel the bulls may actually step in, even though this Marubozu candle is relatively heavy and bearish to the pattern, therefore could see that move before any rebound, that is from $74 a barrel. That's about. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start of the day.